we are speaking to Saurabh today, and he's going to give you context on what the US presidential election result means for you. But he's also got a new book out, and he's going to be speaking to Neeraj in just a bit about Behold the Leviathan. I have this in front of me, and I'm quite curious about what this book is about. I've read a couple of his other books. It says, Behold the Leviathan, the unusual rise of modern India. On that note, Saurabh, thanks so much for joining us in the studio.
Thank you for inviting me.
Pleasure having you. What did you make of the outcome of the presidential election? Did you expect it, first of all?
I think, look, one of the beauties about America is everything is bet on extensively. So by looking at the betting activity before the elections, and it's easy to track it online, we loaded up our bets on US cyclical. So we have been running for several years now, a US portfolio, North American and European portfolio. And 48 hours before the election results, we had a little get-together of the team, and the relevant fund manager decided to increase their weight on industrials in anticipation of a Trump victory. We were a little surprised by the margin. We didn't expect it to be as decisive as it was, but the expectation in the Marcellus office was of a Trump victory, and accordingly the weightage of our US cyclicals, US industrials investments was increased. And thankfully, on election day, as the results came out, we were up 2.5% yesterday, and there's further discussions happening in the office as I left the office about what more to do to benefit from the Trump victory.
Okay. Just a couple more questions from my end, and then Mahima, I'll give it to you. Sure. But so I'm curious about what you make of this. We've already seen commodities react somewhat. I mean, of course, crude has been relatively range-bound within that 75-odd dollar per barrel mark. I'm talking about Brent. There is an expectation that dollar will strengthen. There is an expectation that inflationary pressures will remain in the US. Yields will be elevated. There could be trade tensions with China. What does all of that mean for commodities as a whole, and how do you look at it from the lens of an Indian investor?
Okay. So I think there's two straightforward investment implications, and then I'll give you the one which is being tricky to figure out, right? So starting with the most straightforward one, given his historical hawkishness vis-a-vis China, given that he's said things like 60% tariffs and so on, I think it's reasonably straightforward that we increase our China plus one investments, and there's a fair bit of that in our Indian portfolio. So I'm sure those watching would have heard me talk about Divi's Labs over several years now. So it's been roughly 18 months since we tripled our investment in Divi's, and China plus one is working out nicely. There are smaller investments that we made on that theme, Polymedicure being another one of them, which is catheters, dialysis equipment, dialyzers, basically hospital equipment. China dominates the world in APIs. Hopefully Divi's will get a bigger chunk of that. China dominates the world in medical equipment. Hopefully Polymedicure will get a chunk of that, right? So there's a number of other such plays in India which should do well as Trump presses the China plus button that much harder. The second reasonably straightforward investment, I think, is American and North American cyclicals and North American industrials, to be specific, right? So we increase our exposure to that because he's been very clear that he wants North America, specifically USA, to industrialize further. So if USA industrializes further, then investments of ours such as Parker Hannifin, which is the industrial supplier, should benefit. And this seems to me to be these two bets, I think, are reasonably uncontroversial. Quick disclaimer, I'm invested in all of these names through Marcellus, so are my parents and my clients. The one that is proving harder to get a grip on is the call on inflation. Will Trump generate higher CPI inflation, or will Trump try to engineer a downshift in inflation, for example, by making sure that Russian oil comes back on stream, right? I don't have a decisive view. We're sort of debating that in the office. If you take the view that inflation is not going to suddenly jump up in the next 12 months, US long-term bond yields are not going to jump up, then you might be even more constructive on tech cyclicals. Okay. So, for example, ASML is the kind of base of the global semiconductor supply chain. ASML is a classic tech cyclical. If we end up believing that, hey, we shouldn't worry about a big jump in long-term bond yields in America, and we are in for a big jump in tech spending on semiconductors, then perhaps ASML or tech cyclicals is a broader semiconductor ecosystem. Perhaps we become constructive on that. But industrial cyclicals, I think, easier call, be more constructive. And then China plus one investments back in our own stock market in India, easier call, be more constructive, because I think this, the real China Plus One story potentially begins now, as opposed to whatever we've seen in the last couple of years, which is just the kind of jhanki, the trailer. Abhi to abhi asli picture baki hai.
But you don't have a view on where the bond yields are headed for now. It's 4.5 for the 10-year.
That's right. So if I had a decisive view on bond yields, I'll be able to give you a more decisive view on US cyclicals.
Yeah. Right. Saurabh, I want to understand that all the policies point towards strengthening of dollars, be it import curves, be it tariff hikes. So I want to understand that if the dollar strengthens, the ideal way is that the gold will come down. So your view, I mean, if you have any on gold prices, how will they react in the medium term going forward?
Yeah, look, I mean, both in the context of Indian equities and in the context of American equities, I've never been a fan of gold investments.
Yeah.
Like, just think about it, right? We're discussing the two best compounding markets in the world over the last 20 years. India's 20-year dollar compounding is 13%. America is, I think, 10%. Over the last 10 years, America is 13%. India is 10%. You've got two of the world, these are literally the two best large markets in the world. 65% of the world's stock market wealth comes from these two markets. Even better, Sone pe suhaga, no pun intended, Sone pe suhaga, correlation between these two markets is very low. So when America fires, India might be asleep. When India fires, America might be asleep. You got two markets which perform really well, low correlation, giving you diversification, giving you safety. Why on earth would you want to go and buy gold, boss? I don't understand. Why on earth? Aapko return bhi kam milegi, lower returns, higher volatility. Why do people do it? Just beats me. So what we have done, and we've advocated for a long time, is build a portfolio which is partly America, partly India. You diversify. The two markets have low correlation, so your portfolio gets stability. And as I think most children in India now know, both markets give you 11, 12, 13, 11 to 13% long-term dollar compounding. And therefore, you're compounding at a decent rate with low volatility, free lunch. Why would you want to go and waste your energy on buying gold?
I've heard an argument that said that, when this gentleman was speaking to me, he said, 25, 30 years back when he went to a jewelry store, it was a small one.
Haji.
And then over the course of the next 10 years, they opened multiple branches. And then they went to multiple cities.
Sure.
So investing in the jewelry store might have
nice
actually
one.
been
So Titan last 20 years is 1000x.
Yeah.
So you want to buy bars of gold or you want to buy the biggest jeweler in the country? So we bought Titan. I wish I had bought it 20 years ago. Right?
All of us wish that.
Yeah, I only bought it 7 years ago. But yeah, jokes apart, I think this whole obsession about commodities, gold, I think is a little misplaced. If you're a professional commodity trader, or you're doing it as a hobby, thoda sa satte ke liye, you do commodity trading, right? It gives you a kick, then it's fine. But for serious investors, for people who are setting aside lifetime wealth, this whole speculation on commodities, gold, thoda sa I get a little perplexed by it, especially since the government in our country has done so much to make it easy for ordinary Indians to access overseas stock markets.
Since you spoke about Titan, and we've had this conversation, the two of us, quite a bit. She tracks Trent as well as Titan. Right. There is this whole conversation about the move to studded, the move towards lab-grown, the ease of access of this kind of jewelry. Are you studying that? Do you think that Trent would is slated for better growth because of the kind of space that opens up for lab-grown and for studded?
Right. Look, I mean, we're big holders in Trent as well. I don't think LGD. I don't think lab-grown diamonds is a significant part of our earnings forecast for Trent. Okay. That being said, for Titan, for the last one year, for the last year or so, we've had constant discussions with them about what they plan to do about the space. I think it'll be fair to say we are concerned. So far, the concern has resulted in something 6-7 months ago, a reduction in our position size in Titan. It's still a chunky part of consistent compounders, but yes, LGD has warranted a reduction in our position size in Titan. Why haven't we sold Titan on the back of LGD? Because in the Western world, lab-grown diamonds hasn't turned out to be a big hit, right? In the Indian context, maybe it'll, because we are more price sensitive. Maybe in the Indian context, lab-grown diamonds might be a more potent issue for jewelers, but in the Western world, it hasn't really worked out. Is it because of De Beers' marketing muscle? Is it something else? I don't know. But in the Indian context, we're keeping a watchful eye on the issue, and even even all of that being said, even Titan's recent results suggests very strong demand for jewelry. In Trent's case, we haven't really baked it into the numbers. Trent is doing so much else, which I think will shoot the lights out. Trent is doing so much else, which will shoot the lights out, that we haven't really lost a lot of sleep on LGD for Trent.
I've asked our viewers to send questions, and one or two of them have sent their portfolios for Saurabh to review. That's not something that we can do. If you've got specific questions like Amit Uppal does, and this is an interesting one because this whole rhetoric, and we're talking largely about the presidential election, Trump has against renewable. And his specific question is, can Saurabh talk about the energy sector, especially the latest listing, Worry Energy? It is that renewable play, even if you don't have a specific view on Worry. Can you talk about the opportunities, if at all, in the energy space?
So look, I think the obsession around ESG is abating. I've seen it with our Western clients. The obsession around ESG is abating. I'm nobody to comment on should it abate, should it not, should we be more concerned about the environment, should we not. My job is to be realistic, and I can see amongst our Western client base, the institutional investors for whom we allocate money, their focus on ESG is clearly abated in the last couple of years. Given Trump's known stance on this issue, I suspect it will go down. The whole obsession about ESG will go down a couple of notches. Now, given that nobody wants to have their, the air around them, clogged up with noxious substances, and North India, where we know that pollution is a big issue, my reading is that the way the world will reconcile itself to saying we want cheap power, but we don't want day-to-day fumes. I think nuclear power will end up making a big comeback. It's already made a big comeback in America. You might have heard firms like Amazon have invested in captive nuclear power plants because the big data, sorry, the data centers require so much power that firms like Amazon have invested in captive nuclear power. And if that's the case, then and Trump is back, I think there's a good chance that nuclear power makes a comeback.
India has talked about modular nuclear.
Our government has talked about, in our country's case, technology is a bit of an issue. But if the friendship between the two premiers, the Indian and the American premier, if the friendship escalates, then who knows, America might be willing to do technology sharing deals. So I'd be a little careful about getting too worked up about renewable, given that the main sponsors of renewables, the Western nations, are gradually and slowly throttling off on it, as evidenced by the clear rise of nuclear power in America over the last 18 months or so.
Right. We have one more question from SP Sinha, who's from Mumbai, and he wants a view on the auto space. He's listed a lot of auto stocks. I'll not name all of them, but overall, your view on the auto space, and he wants to know, what would be your top picks in the auto space?
If you do, yeah.
Look, I mean, what I've been telling my colleagues, what I've been telling us clients, what I've been telling other people who are interested in subjects is, I think after 3 great years of economic growth after COVID, we're in a cyclical downturn. There's nothing unusual about it. No country's economy goes up in a straight line. Right. So F22, F23, F24, India had 7% GDP growth, 18, 19, 20% EPS growth. I think we've entered a cyclical downturn. I don't think it's a multi-year issue. I think it's a multi-quarter issue. Given that we've entered a cyclical downturn, I think auto stocks will come off far more. In fact, en route to your office, we were having a lovely conference call on how much more will auto stocks come off. And when auto stocks come off far more, we're trying to identify some juicy bets that we will load up on. So I would suggest, if you are very enthusiastic about the auto sector today, I would just say temper your enthusiasm a little bit. Give it another couple of quarters of soft auto earnings, and then we should think about it. If someone wants to know what are we invested in auto, our biggest investment in auto today is Eicher Motors. Why? Because the Royal Enfield tends to be less of a cyclical play, and Royal Enfield also has a significant rural angle. I think rural India is coming back. The numbers suggest, not just Royal Enfield numbers, but generally two-wheeler numbers suggest, discussions with the FMCG companies suggest rural India is coming back. So Royal Enfield's done a terrific job on rural. Siddharth Lal and company have launched a range of bikes from the 1.5 lakh price point to the 4 lakh price point. I haven't seen too many competitors put a credible show. I think if anybody has done a half-decent job, it's the Yazdi Java people. They seem to be doing a decent job. Barring that, there's no real competition at the Royal Enfield end. Secondly, on exports, they've done a terrific job.
Yeah.
I'd gone to New York on work 3 weeks ago, and on Fifth Avenue, saw a massive Royal Enfield ka sign, and felt really good as an Indian. On Fifth Avenue, massive Royal Enfield ka motorbike. Yes. And the Volvo Eicher trucks piece also has come along nicely. So kudos to the folks at Eicher Motors. They've done a good job. All of that being said, I would suggest whoever's enthusiastic about auto, just be a little careful, because I think we'll have 2 to 3 quarters of soft numbers on the economy in general and auto in particular.
So New York is one, but I saw one very close to Denpasar airport not too long back, so that's pretty cool as well. Specific question from CA Uttam Kedia, and he said he insists on doing that, just like you do, Mahima. He's asking Saurabh about chemicals, specialty chemicals, in the context of China Plus One. You've kind of mentioned some sectors that could benefit, but speaking of soft earnings and bottoming out, do you think this one has?
Yeah, I think whilst I would love to believe that China will stop dumping, or Trump will make China stop dumping, or China will have a great economic recovery, there's many ways to think about it, or our country will impose a whole host of anti-dumping duties and so on. I think the general tone and tenor of chemical prices will be niche. So what we have tried to do is invest in companies which are in spec chem, but whose raw material comes from China, and therefore they benefit from Chinese dumping sasta stuff into India rather than being a casualty of the same. So again, Divi's would be a straightforward example. Divi's gets the KSM, the key starter materials for Divi's comes from China, and therefore as China makes the KSMs cheaper, Divi's margins have gone up a bit over the last 5-6 quarters, right? Similarly, in our small cap portfolio, there's a company that we've invested in a year and a bit ago, which is benefiting from the same dynamic. It's called AMI Organics. Yes. So AMI supplies to folks like Divi's. So AMI's raw materials go into Divi's as API, but AMI in turn gets raw materials from China, right? We've had alkyl amines for a long time. Alkyl amines, as is well known, they have requested the government to put ADD on acetonitrile. I don't know what will happen to that request. Alkyl is neither making a loss nor making a profit on acetonitrile, but thankfully for us and for all those who are alkyl shareholders watching, on methylamines and ethylamines, that can't be dumped from China, and therefore on methyl and ethyl, alkyl's numbers have blossomed nicely, and I think the numbers of the last 2 quarters, courtesy ethyl and methyl, alkyl is doing fine. So either look for companies who are not vulnerable to Chinese dumping, or look for companies like Divi's and AMI Organics who benefit from Chinese dumping. I think it'll be a little fanciful for me to sit here in BKC and see Chinese dumping kam ho jayega ya band ho jayega.
Yeah, all right. But Saurabh, a pleasure as always having you.
My pleasure.
In
Thank you for having me.
Thank you so much for joining in.